Hey, that's actually a funny question. So the question is, what's something that I do every day that most traders would call useless? I would say one thing I do every day that some people might call useless is a pre-market meditation, prayer, and gratitude like practice. So a lot of traders would say I'm wasting my time. I should just be jumping on the chart, all this other stuff. I don't think so, though. I think that getting my mind right is really important. And I'd say even before I do that, when I first wake up in the morning, I think about like how I'm feeling right away and what I need most before I even like consider getting on the chart. And that's like all that stuff is super important. And then I'd say the second thing is once I do get on the chart, I draw out what's going on in the pre-market. A lot of traders just ignore the pre-market. There's a lot of traders who don't even look at the pre-market. But I think it's really important to draw out what happened in the pre-market so that I have a roadmap of what is likely to come. Do setups even matter if the execution is trash? It depends on your trading style, right? So like, here's a good example of that. Like, let's say you want to trade second entries and you got a good setup like this. If your execution is bad and you like get in too late, what that means is that your stop loss still has to go way down here, right? So the problem with that is that your stop loss still has to go below the signal bar, and now you need it to go way further to get your trade set up. So you're basically decreasing the likelihood of a good setup working out if your execution is bad. Can it still work? Yes, but only if you're more of like a swing style trader that goes for a larger target. And even then, it's like your execution needs to be so good to get the best entry and have the best chance of it working in your favor. If you want to have a high win rate, your execution needs to be pretty much flawless. Do I think that backtesting makes traders overconfident? Yeah, for sure. I think a lot of traders come into trading and they think that backtesting is going to be the thing that makes them a profitable trader. They think that they're going to find a strategy and then backtest it, and it's going to work with some win rate, risk reward thing, and then they're going to implement that in the real-time market, and it's going to be amazing, and then it fails. And the reason it fails is because they retrofitted their entire strategy to past data, and also a lot of times the way the market prints in real time is different than what it looks like when you look at it. Like the way the candles move in real time affects the way that you think about things as you trade. That's why I trade tick charts. They're so much more powerful than time-based charts with how you watch the price action print. And the other thing about it is when you backtest, which you should at least backtest a little bit so you know and have a system that at least looks reasonable, then you have to test it in the live market. So the best way to do it is to have a demo account that has live market data, and you can trade with your demo account on the real-time market data to basically essentially forward test your trading and see if the strategy actually works. Because a lot of times you're going to get way different results when you start doing that versus when you were backtesting. You asked, would NQ be popular if it didn't move so wild? No, it wasn't popular. When I was first trading back in like 2017, I didn't see anybody talking about NQ back then. Everybody was talking about the ES and crude oil. Hardly anybody was talking about NQ. Everybody was trading ES futures, crude oil futures, and then later on, gold got a lot more popular when we started to have a bunch of inflation because gold started going crazy, and NQ started going crazy when all the tech stocks started booming. So really, that's what it came down to. A lot of it had to do with the volatility. The other aspect of it was, I think because prop firms got popular, it was like a perfect storm to make NQ take off in popularity because we had the tech stocks booming. So that created volatility on NQ. So people were trading it more. And then we had all these prop firms start coming out, and they didn't restrict you on your margin that much, right? I think it's crazy that these prop firms allow you to trade the same number of contracts that you would trade on the ES versus the NQ. I think that it doesn't make any sense. The fact that a prop firm will allow you to take a trade with 10 ES contracts or 10 NQ contracts makes absolutely no sense, because when you're trading with a cash account, you can only, if you trade with 10 ES contracts on NinjaTrader, that's a $5,000 entry, right? If you trade with 10 NQ contracts, that's a $10,000 entry. It costs $10,000 to enter 10 contracts with the NQ because it costs $1,000 per contract to enter an NQ trade, and it's this, and the ES is only $500 per contract. So that is a margin built into the cash brokerages. That's like NinjaTrader brokerage fees or whatever. But I don't know what they all the rest of them charge. I know some even let you take ES trades, I think, for $400 instead of $500. NQ and crude oil, they're $1,000 to enter a contract. They're more volatile assets. They have a different margin requirement. They're valued at different levels. The prop firms don't delineate, which means that you could actually enter with a prop firm and you could be trading with an insane position size on NQ. I think that the traders who trade prop firms realize that, and it became this like super, super popular thing. And yeah, and David said it right there. A lot of prop traders will full port, which it means like full portion, full position size on the NQ and pass the evaluation in one trade. That's what they do. And it became this popularized thing for these people to just over leverage themselves. And I just think it's completely irresponsible because that is what happened. And then people started putting it on YouTube. That made it popular. And now all these people are trading that way. And it's just super irresponsible. So unfortunately, that's just what it is. But I think the ES is a much more responsible way to trade. And that reflects even in the way the margins are calculated in a real brokerage. If you were actually going to be an NQ trader, you would actually be trading with half the position size that you trade against versus the ES. So like if you're someone who trades with 10 ES contracts on a cash account, you would be trading with 5 of those with NQ. So just keep that in mind. I would say, because the thing is, gold and crypto are alternative money systems, alternative monetary systems to cash, which I think is smart, right? I think that gold and crypto, I think people that are investing into gold and crypto are doing it for very valid reasons, right? Because they're worried about the way the government handles money. They're worried about the aspect of it not being backed by anything these days. It's got different fundamentals. It's an alternative to the traditional systems. So I think crypto and gold definitely have that going. The one caveat to crypto, though, is that there's a lot of people who just buy ridiculous coins that have no fundamentals, terrible projects. So if we're talking Bitcoin, then yeah, there's some really good fundamentals there. If we're talking just like some ridiculous coin like pump coin, then it's a joke. It's an absolute joke with no edge, right? Forex is, I mean, most Forex traders will tell you it's hard to be profitable long term because of all the janky spread, the way the leverage works, like just the way that it goes. Like banks can do stupid things. Like Forex is just, man, I think it's one of the worst things to trade. That's just my opinion. Look, that's just my opinion. You can take that for what it's worth. NQ, what I'll say about NQ is NQ does have some fundamentals, right? Like if you're really into the tech stocks and you really follow it, there's some good stuff there. You can trade NQ effectively. I just think a lot of people though because of the whole like prop firm full port thing that people have been talking about, that's making NQ like the equivalent of the people who try to trade YOLO meme coins on crypto. It's not really the way to do it. So, that's my take, at least. That's my take. I actually think crypto trading is pretty great overall. So Steve said, you keep holding trades a little too long. You go from being up, waiting for one more bar, to going negative. You know what? So Steve, there's a few ways to handle this. You got to, first of all, analyze, like, what is that in you? Is it because you have a fear of missing out? Is it a greed factor? Like, you just feel like you need the trade to go super big? Like, so there's a few types of ways to look at this. What you want to do here is you want to look at it like this. Like, if you're having a challenge with holding trades for too long, going negative, analyze, is it a fear of missing out? Is it greed? Start to think about like what's really happening there. And also, I don't know your strategy. I don't know if you're trading the same system as me, if you're trading my strategy or whatnot. But like, you got to think of it like this. The ways to really manage your trading are as follows. Especially if you're a scalper, you can scalp a little bit and then move your stop to break even and leave a runner. That's what I do. I scalp like about 80% or so of my position. Then I leave a runner and try to get more. Sometimes I don't even take the runner. I just take the whole thing off if I feel like the market is like doing some choppy stuff. The other thing you can do is you can trade where you go and you move your stop to break even at a certain point and then you let it run, you have to be okay with it coming back to stop you at break even if that happens, right? You have to be okay with that. You can also have a bigger target and just let the whole thing go and be okay with the loss. I think that it's better for most traders to move their stop to break even when they get to a certain amount of profit at least, so that at least then they're not going to lose anything on the trade, you know? Like if you, or maybe break even +1, so at least their commissions are covered with a tiny profit if it comes back. And so you can basically treat the whole position as a runner, or you can scalp some and exit some. Another thing you can do is move your stop to break even and take a few different take profits along the way, and at least you're then locking in profit. So you got to think about what works best for you, and you got to test it on a demo account and see what works best for you with your personality. Like I know some traders who they just move their entire position to break even and let the whole thing run, and they try to get a huge winner, and they're okay with getting a bunch of break evens to do that. I personally can't do that. I don't like watching my P&L go up and then come back against me. I just don't like that. I like taking some profit early, and I'm okay with missing a huge move as long as I locked in profit. I feel good about that. But everyone's psychology is a little bit different, so you got to experiment. But if you're holding trades into profit and then taking a loss, that's obviously not going to be a sustainable method. So you want to really do some testing and research on that, and really get clear on what you're feeling and why that's happening. Like journal about it and see what you can come up with in like what is causing you to feel that way, and test out on a demo account some different methodologies for taking profit and see how you feel as you do them. See what works for those. The price action rules definitely still work in the overnight, but it's so slow that you're going to be sitting in trades forever. Like if you look at the overnight session on the tick charts, I mean, look at this. You've got barely any bars, you know, so you're like a second entry will form, but you're going to be sitting in it forever. Like here's an example, right? So let's say you were watching this here and you got a pullback, first entry, pullback, second entry. You could take this second entry right here to close outside, move to a new low. You could take that and it would have worked, but who knows how long you'd be sitting in that trade. Now it moved pretty far, so that would have worked fine. You would have gotten a second entry long there. That's an overnight trade, easy trade, but it might have taken you, you know, hours for it to like properly play out. So you just have to be aware of that. And the bars are big because it's overnight. Not that big, but you get the idea. So you just have to know that kind of stuff when you're taking those setups. All right, so what are we going to get here? We got a first entry short. Maybe we get a second entry short up here. Hard to say. There might be a second entry short that forms, so I'm actually going to hang out right here and just watch this. We might get a second entry, but I would love it to be up here, higher up, because it's really not off the level. I don't want to take it if it's not off the level, so we'll be patient here and we'll wait. What we're seeing here is a channel working higher. You have a pullback, first entry. If it breaks below this bar, it's going to be a second entry short off of this level. Again, it's not perfect because we broke out of the highs of this level earlier, which makes it a little bit less ideal. Like if we had really respected that level better, it'd probably be a little bit better, but still a decent setup. This bar is only 6 ticks, so we're going to be able to take this one with an 8 tick stop loss as long as our fill is normal. We just broke out the bottom here. We might try to break out the top there. So we'll see what we get here. My runner is all the way down here, but I'll just move it to that level there. We'll see if we get a decent setup here. We'll see if this ends up working for us.
Target filled.
All right, target was filled there. It didn't move my stop to break even because it didn't tick through the order. So I'm going to move it manually here. Usually if it'll move automatically if it ticks through the order, but I was sitting in that trade for long enough that it filled me. It's unfortunate that it didn't tick through. I'm hoping it does and doesn't stop out my runner. Oh, it stopped out the runner. Annoying. I wanted it to fully tick through there. It ended up not happening. Man, look at how sideways this is. Just absolutely congested. And this is always unfortunate. Like this happens sometimes at this time of the day. You know, this happened to me last week when we took a trade where it just like I took the trade and then congestion formed after I was already in the trade. It's always annoying when that happens. Here, let me mark this. This is the trade I just took. And I will say this. This is not like I was saying this here with the with this trade was that you have a first entry, second entry short, but it's again, remember I was saying a lower high would be better, but when the lower high formed, it formed as a doji. So, and then it never broke below it. So you never got the full setup there. So anyway, that'll happen. That'll happen. But that's the beauty of the ATMs, because I got filled for my scalp without it ticking through my order and had a winning trade there. But if you don't enter with an ATM strategy and get in your limit order early enough, then I could have ended up with a loser there. So there you go. Are there any analytics that can be used to determine when to scale, either personal performance or perhaps? Okay, so all right, this goes along with Jay's question as well about like how to grow at a steady pace. Here is my take on this. If you're trying to grow at a steady pace, this is what you want to do. By the way, I'm going to speak to this as if you're starting with just the ES. Now, if you are starting with a smaller account and you're on the MES, just apply what I'm about to say to that. So when you're trading with one ES contract, you don't want to try to trade with runners most of the time doing that. You just want to scalp out the whole thing. Or if you're trading with one, you can play the game of after it moves in your favor, you can move your stop to break even and treat the whole position as a runner to get a little bit more. Your mileage is going to vary, so you have to experiment with what works best for you. And then eventually when you get to two contracts, you do the same thing. You either scalp the whole thing or you treat the whole position as a runner. Now, I don't think it's worth it to actually trade with like a scalp plus a runner with 2 take profits until you get to 5 contracts, because then you can scalp 80% for profit and leave a runner with 20%. Some people would argue you can do that with 4 contracts. I just think the math is difficult because let's say you're trading with 3 and you get a scalp on 2 contracts and then you try to get a runner on the 3rd. Well, you're only getting profit on 2 contracts, but your loss, if you take a loss, is going to be huge because it's going to be on 3 contracts. So I think you're best off scalping the whole thing or moving your position to break even and trying to get a runner on it. Depending on how often you get runners and how you play them and all that sort of stuff. And I'll finish charting this in a second. But the point is, you want to be diligent in your approach. And then what you want to do is you want to start with 1 contract. Once you get to the point where, you know, you're confident, you're getting a lot of good results, then you can scale to 2. But you only want to scale up insofar as it doesn't freak you out, right? Like, so if you go from trading 1 to 2 and you're just completely losing it in your nervous system, you're probably not ready yet. So it's all about, you got to document like how you're feeling when you start taking those trades. If you're freaking out and you can't let the trade play out and you're just like, your monkey brain is interrupting you, you can't let it play out properly, you're losing it, then it's not a great idea. It's just not a great idea to be scaled up that much. You probably need to scale back down. So you want to do it very, very slowly and over time. I can't give you a specific analytical tool or regimen or anything like that. I think it's really based on the individual and how confident you are in the strategy and how good you do at it. So I wish I had a better answer than that, but it really comes down to how you're feeling in the trades and how you handle the pressure of it. And so what I did was I then started to only scale up 1 contract over time. After like going through all that turmoil, I scaled way down and then I slowly and methodically increased it after having, like, I would trade a certain way for like weeks at a time and be profitable, and then I'd scale up a contract, and I just kind of did it like that. So that's the way to do it. Thanks for sharing that, because it takes a lot of guts to actually just admit that kind of stuff. Because that's the first step is putting the ego aside and realizing that like this game is hard and it is a challenge to get consistent. And it's not like we go through a lot of emotional turmoil as traders. So what's probably happening here is there's a lot of stuff that happens psychologically when you're trading. And really, like, you'll end up in these positions where you feel on top of the world as you're winning trades, and then you take losses, and our brain wants to protect us. Our ego wants to protect us. And so what'll happen is we start to have this like cognitive dissonance that happens where we believe in our strategy, but then as soon as we take losses, we want to blame the strategy instead of blaming ourselves. But once I got to the point where I realized that every time I lose a trade, I just blame myself for it, right? I don't blame the market. I don't blame my strategy. I blame myself for taking a bad entry, and I take full accountability. That makes a huge, huge difference, because once you start taking full accountability for every decision you make in trading, you'll start to realize that you don't want to just abandon your strategy and make an excuse for why you lost the trade. Unless your strategy is terrible. Now, obviously, you have to have a good strategy. Like, you need to have tested that and have confidence in it. But if you've been killing it with a strategy for a while, especially on demo, then you know that it works. So that's one of the big things, is you want to make sure that you do have a good strategy. But once you do, then it's just a matter of taking accountability. So that's the whole thing. That's the whole thing. And I would say, like, just do your absolute best to stay on track. And if you're trading 3 months only, you should be probably still trading demo. That's my opinion. Do whatever you want, but you should be trading on a demo account and have like extreme confidence in your strategy before you trade with cash. If you trade on the demo account for a while, then you should get there. Now, I will tell you, when I was learning price action trading, I would go through the same thing. I would take a loss and I'd be like, oh, I had my trend line drawn wrong, or I'd do this. So there is a learning curve period where you have to learn the actual strategy. But then it just comes down to execution after that. And just, and everything. Any advice on how to manage emotions when you lose, especially when targeting 4 ticks? It's your biggest challenge with Pats. Look, that was probably my biggest challenge too, and it's why I abandoned it a few times. So there was a few times where I just like got so annoyed after taking a loss that I just like abandoned trading with Pats a few times, and I went back to trading older systems. And the reason was, early on, I would get frustrated if I had like 3 wins, let's say, and each one was 4 ticks, and then I got like a 15 tick loss and I was literally in the red after having 3 wins in a row. I was so annoyed by that process. But the thing is, like, the way that I handled it was I changed my mindset to only take up to 4 trades a day. When I set my mindset to I'm not going to take more than 4, that actually made a huge difference. And when I started to be okay with having 0 trades, which I don't love having 0 trades, but I started to become okay with it needing to happen once in a while, right? Like, let's say I missed the best setup of the day. Then I'd go, well, I missed the best setup and there's not really any other good ones, and I'm still going to end my trading session on time. So I started to set rules for myself. I don't keep trading after I start the live stream, right? Like I will trade on the live stream a little bit, but my actual session before the stream is my session. So let's say I get 0 trades in that session. I just have to be okay with that, right? I just have to be okay with that. That was a mindset shift for me, to feel like I don't always need to have a trade. Now, typically I am going to get one, but you guys know what happens. Once in a while you go to enter a trade, like someone in my paid community today tried to get this trade and they said they didn't get filled. It just didn't happen. Like, it moved too fast for them. That'll happen once in a while. And if you miss a really good setup like that, you don't chase it. You just go, okay, I missed the trade, but I did, at least you document where it was, and you at least know that you were trying to take the right setup. So a lot of times I'm not going to actually take 4 trades. A lot of times in my morning session, I might only take 1, 2, 3 trades, and I'm cool with that. And once I shifted to that mindset and only taking really good setups, not taking all the green arrow setups, taking mostly just blue and red arrow setups, that got a lot better for me. And that helped me manage the psychology a huge, huge amount. Like, it made a big difference in my trading. So that's something I just want to share with everybody. Like, you really want to be aware of that. Like, if you are thinking that you need to trade Pats and take 8, 10 trades a day, you're probably going to set yourself up for failure, because you're inevitably going to take one of those losses and it's going to tilt you, because it does hurt. It hurts when you take a loss that erases 3 wins. It hurts. Don't get me wrong. We're trading the opposite of what a lot of people do. A lot of people take these trades with a smaller loss and a bigger win. and they can take multiple losses and then make it all back in a win. That's not the way we're trading. So it can hurt, and it's a different than a lot of other ways that people trade. But you'll get past it when you start to really be selective about your entries, and you start to really trade this style with only taking very, very sure thing setups and being okay with the fact that you might miss it. Or if you see a green arrow trade and you're like, I don't know if this is a green or a red, then just skip it, right? Just skip it, or take it on demo only. And then, you can learn from that, and you'll get much better that way. So that's just at least how I handled it. Because now I don't really mind. If I take a loss, I don't really mind, because I'm up overall so much that it's okay. It's okay. It's not a huge setback anymore. The 2000 tick chart, every candlestick is 2000 trades. The reason I like it is because it helps me see how much volume of transactions are happening in the market. That doesn't mean the actual volume of contracts. It means the actual transactors, right? Because 2000 trades is usually, there's people on the ends of those trades. It helps me see how many buyers and sellers are in the market fighting back and forth. So it helps me see that price action as it unfolds. The speed at which the candles print helps me know what kind of volume of transactions are happening. So I like it because it helps me see the price action better. It's more nuanced than just a 1 minute candle or something. If I was just trading like a 1 minute candle, 1 minute might have 500 transactions and the next minute might have 5,000. And that's a big difference. I can see things print more clearly on the tick chart. It helps me read the price action better. So that's why I like it. I just think it's much better than a time-based chart. So hopefully that answers your question. All right, so you're wondering, why do so many NQ traders think that the volatility gives them an edge? I think a lot of traders see a lot of heavy movement, and they like to feel like when they enter a position, it immediately moves in their favor or against them to be in and out quickly. A lot of traders think that there's like some benefit to that, but really that is most likely because they have not figured out how to deal with the emotion of being in a trade. Because it's always easier to be in a trade when it immediately starts moving in your favor, or if it just goes against you and stops you out. It's always easier to handle that than to be sitting sideways in a trade and waiting for the move to happen and all that. And when you're in the ES, it has a bigger tick value in terms of the value per tick. So it moves less, right? Like $12.50 per tick on a contract. So you might be sitting in a trade, but the difference of like 4 ticks of movement is a big difference, right? Especially with a lot of contracts. Well, that for some people, they don't like to feel like they're sitting and waiting for it to move a little bit and all this stuff. Whereas with the NQ, that high volatility, it immediately moves forward or backward for people, and they like that feeling. But that would be like trading the ES on like a 5-second chart, or trading the NQ on too small of a time frame. I don't think that is a good approach overall, though, because you need to be able to deal with the confidence in your position that you're taking. You shouldn't be freaking out when you enter a trade if it slightly moves against you or whatnot. You should be able to let the trade play out. But I think that a lot of people that are trading NQ like the fact that they might get into a trade and it might play out really, really quickly because of the high volatility. But that's not an edge. That's just you trying to figure out how to not deal with the harsh reality of your emotions and psychology while you're trading. But in reality, lower volatility assets, you need volatility as a trader, but slightly lower volatility assets like the ES that also have higher volume, they're just more reliable. Like they have more stability. The moves are just more reliable. So I actually have more confidence in a trade on the ES than I would on the NQ, even though it might take longer for it to play out. Sidebar. Okay, so when you get a bar like this one that is inside the other bar, right? So if you draw a line from the top of this bar right here, like, so you see how, I'll just draw 2 little lines. You see how this candle is inside the other candle next to it? It's not higher anywhere and it's not lower, it's inside. Technically it has an equal high, right? So it's not exactly inside, but it's I still treat that like an inside bar. But if this broke like 1 tick higher, then it wouldn't be inside the other bar. But it didn't do that. So it basically, everything that happened in this bar is inside the price action of the bar before it. So that's what I mean when I say inside bar. It's like inside bars can be congestion sometimes. And then you see it still does break higher, so the second entry has triggered, but it's not one that you would take because of the inside bar. And also remember, it was risky. We have this high here. It's a little resistance. What do we do after we enter a trade and then you realize it's going into congestion? Okay, so generally, I don't think it's a good idea to mess around with your trades once you're in the trade. However, if you enter a trade and then it does turn into congestion, you have a few options. So let's say I took a trade. Is there congestion today somewhere? I'm trying to see if there's like a good example. It doesn't matter. If I get into a trade and then it turns into congestion after I enter, one thing I can do is just try to get out of it like at a tiny win, right? Like go for like 1 tick of profit, because then at least it pays for your commissions and you make a tiny profit. So that's one thing you can do. You can also just lower your profit to like 2 ticks or something really small, and just try to get out of the whole thing and make a tiny profit. So a lot of times you can just try to get out for a small profit or like at break even. I would say that's like the most likely thing that you want to do. The other option is you could just let it play out. But the thing is, once it turns into congestion, to me, it becomes like a 50-50 on whether it goes up or down on you. Now, if you enter congestion and your stop loss is bigger than your take profit, then maybe you have a slight edge on it working, but it's probably not a high enough percentage for it to be a good idea. So a lot of times if it turns into congestion, I'll just try to take a couple of ticks of profit and get out. Or like move my stop to break even really quickly when it goes up like a tick or 2 or whatever, and then just like let it stop me or hit like a take profit. Like I might move my take profit to like 2 ticks, but then move my stop loss to break even and like let it just either do one or the other and just get out with like basically a scratch or like a slight loss on the commission cost or a tiny profit, something like that. Oh, what do we see? What do we see? What do we see, fam? What do we see? Goal! It's a goal, fam. It's a goal. Thank you, everyone, for getting us to our 50 like goal. We did it. We did it, fam. Shout out to the chat for always bringing the absolute fire and smoke. Shout out to you, fam, for bringing it.